Presidential Executive Order, Modernizing Payments to and from America's Bank Account, March 25, 2025. Purpose and context. The U.S. government still uses paper-based payments, e.g., checks and money orders, for many transactions. These paper transactions cause delays, fraud risks, and operational inefficiencies, are 16 times more likely to be lost, stolen, or altered than electronic payments. Cost over $657 million in taxpayer funds in fiscal year 2024 for maintaining outdated infrastructure. With mail theft and fraud complaints rising since the COVID-19 pandemic, the order seeks to phase out paper checks in favor of secure, efficient electronic payments (EFT). Importantly, this move does not authorize the creation of a central bank digital currency. Stated policy, Section 2. The U.S. government's policy is to combat financial fraud and improper payments, improve efficiency and reduce operational costs, and enhance the security of federal financial transactions. Mandate to eliminate paper-based payments, Section 3. Effective September 30th, 2025, the following changes will occur. Where legally permissible. No more paper checks issued for intragovernmental payments, benefit disbursements, vendor payments, tax refunds. All federal agencies must adopt electronic funds transfer (EFT) methods like direct deposit, prepaid cards, and digital wallets. Enroll recipients in EFT systems. All payments to the federal government, e.g., fees, fines, taxes, must be made electronically, with few exceptions. Agencies, especially Treasury, State, HHS, Education, VA, and DHS, must eliminate the use of Treasury lockbox services used to process physical checks. Accelerate the adoption of digital payment systems. The Treasury Department will provide centralized tools and systems to support direct deposits, debit and credit card payments, digital wallets, and real-time payment platforms. Other modern digital options. Exceptions and accommodations, Section 4. Limited exceptions will be allowed, reviewed by the Secretary of the Treasury, for unbanked or underbanked individuals lacking digital access, emergency or hardship payments, as permitted under existing regulations, e.g., 31 CFR, Part 208, national security or law enforcement activities requiring non-digital methods. Any other case the Treasury Secretary deems appropriate. Alternative, secure non-digital payment options will be made available to those qualifying for exceptions. Implementation and outreach, Section 5. Public awareness campaign, led by the Treasury to educate federal payees on the transition and guide them through digital setup. Agency coordination. All federal departments must work with Treasury to implement the transition. Ensure recipients have necessary support. Stakeholder engagement. Treasury will work with banks, community groups, and advocates to support the unbanked, underbanked. Data protection. All agencies must safeguard classified information, personal data, tax return details, reporting and oversight. Section 6. Within 90 days, agency heads must submit compliance plans to the Office of Management and Budget, OMB, explaining how they'll eliminate paper-based transactions. Within 180 days, the Secretary of the Treasury must report progress to the President via the Assistant to the President for Economic Policy. Implications and takeaways. Marks a major federal shift toward fully digital financial operations. Aims to reduce fraud, speed up payments, and save taxpayer money. Seeks to close gaps in digital access, especially for vulnerable populations. Will require a nationwide coordination effort across federal agencies, banks, and stakeholders to ensure a smooth and secure transition by late 2025. Subscribe for more!